Apple is not just another company, as you know. It is the biggest company in the world. It is owned by thousands of mutual funds, millions of investors. It is the top 5 stock in a couple of hundred ETFs. In other words, it's got massive stock market weight. So even if you don't care about what Beijing is doing, as an investor, you're looking at this and thinking, could this hurt the overall market because of Apple's power?
Well, I think that it's symptomatic of just this larger relationship that we have now between the United States and China. You have geopolitics rather than economics are in the driver's seat. The truth is that neither side needs to do any of these things for economic reasons. They're doing them for geopolitical reasons. Both countries are now, and I think especially the United States, is concerned about the balance of power. Because of China's rapid rise, it is now capable of being a peer competitor to the United States. And the United States does not like having peer competitors. And so I think this is all part of a geopolitical game of tit for tat.
Do you think that China ultimately wants to have almost its own economy technologically? What I mean by that is they have their own Twitter. They have their own Google. They have their own, not effectively, internet. They've got their own software. Now they want their own phone. Does China want to be a closed garden?
So I think China, just looking out for its own interests, has to be concerned that if they are too dependent on the U.S. trading system and the U.S. dollar, that they are vulnerable. And so I think what they're trying to do now is create their own trading bloc through BRICS. But I don't think this is necessarily something they wanted to do, but I think it's something they feel compelled to do in order to secure their own economic future.
You know, the market can't necessarily afford the NASDAQ to have a rollover. Can't afford the biggest stock in the market to all of a sudden have a bout of weakness, because it's going to be hard to overcome that.
Totally agree. And I think that the S&P 500 having 35% of its weightings in tech and in comm services. Also, it's not going to just be Apple that goes down. It's going to drag down a lot of other names. And you can't have that happen and the market actually participate higher. So here's the thing about Apple. It is so over-owned, right? And whether you're underweight or overweighted, some people believe you should be 7% weighted. It's been painful this year, but the stock's still up 36% in the year. It trades at 29 times earnings, and I'm not 100% sure why you would pay 29 times for earnings that are down 1%, total revenues that were down 5%, iPhone sales were down 2%, iPad sales were down 20%. So I get the story of gross margins, OPEX coming down, free cash flow. But I don't know if I want to pay 29 times. And in terms of the China data, China is 20% of total revenues. That's a big number, right? And so this, the iPhones, they do about 40 to 50 million in the region. And if you ban the government people, that's about 5 to 10 million. And for every 1 million iPhones, it's about a penny a share to earnings. So you can see it could get bigger if the ban broadens out.
I think there's two narratives that are really playing out. First, is this really just speeding up the inevitable? Is China's move here potentially speeding up the inevitable in the sense that Huawei has 7-nanometer chips that are really potentially going to compete with Apple and start selling to Asia, start selling to Europe, and that could take away sales there. The other story potentially is the elephant in the room. I think that services, and Apple's going to become more dependent on services. Obviously, selling less phones gets services in the hands of less people, but Apple Wallet is going to start taking more and more share from places like PayPal. I think that's something to pay attention to as well.
Here's the real elephant in the room. iPhone revenue has been extremely choppy, and I don't know that will ever change because you run out of hands to put an iPhone into at a certain point. There's a reason why Tim Cook is in India, and they're talking about it because they don't have the next growth market. It's a replacement business now.
There is a give and take. There is a tug of war going on between the U.S. and China right now. There's going to be bad days like this.
China needs Apple, maybe not as much as Apple needs China. China needs Apple. Foxconn is the biggest employer in China in that high-tech space. I will take the under, there is literally zero danger of Huawei being a credible competitor. Everybody gets that.
You're right.
This is the elephant in the room.
It's going to be down 11% this year. iPhone sales are going to be down 11% this year, but analysts expect it to snap back to be up 10% next year. I think some of this also is the rotation, Scott, right? I mean, higher interest rates, long duration assets, the growth is going to suffer, technology is going to suffer. I think that's a big part of what's going on because you are seeing a broadening out and a rotation. Look at Russell 1000 growth. It's down almost 100 basis points today. Russell 1000 value is flat on the day. So you are seeing a rotation back into value, and I think Apple's getting caught up in it.